The Property Bulletin by London Property, the home of superprime.
The recent tax changes on second homes in the UK are raising serious concerns, especially in tourist hotspots like Burnham Market, Norfolk. With double council tax, scrapped holiday let tax breaks, and higher stamp duty, the government claims these measures will free up housing for locals and generate funds for councils. But here's the catch. Local businesses depend on second home owners and tourists for survival. From wine merchants to estate agents, they rely on the spending that keeps their doors open. Many second home owners aren't wealthy elites. They're everyday people who contribute significantly to the local economy. They're frustrated by heavy taxation without clear benefits for the community. Experts warn that these tax hikes could backfire, leading to fewer visitors and reduced spending, which could ultimately weaken these vibrant villages. If the government isn't careful, what was intended to strengthen communities might just end up driving them into decline. The balance between supporting locals and maintaining a thriving tourist economy is delicate, and it's a conversation we all need to be part of. Blackstone has just raised an impressive $10.6 billion for its latest European real estate fund, Blackstone Real Estate Partners Europe's seventh, marking a significant milestone as their largest European fund to date. This achievement comes despite the challenges faced in 2024, showcasing Blackstone's ability to attract substantial inflows with major backers like the Canada Pension Plan and New York State Common Retirement Fund stepping up. The broader European real estate market is also witnessing a wave of institutional investment, with firms like KKR and Ares Management making bold moves in hotel acquisitions and housing developments. This surge in activity signals a growing confidence in the sector's potential for recovery. Blackstone's success, alongside these other significant investments, reflects a collective belief that Europe's real estate landscape is on the verge of a robust rebound after recent disruptions. For investors, this is a pivotal moment to consider the opportunities that lie ahead in this revitalizing market. Donald Trump's new tariffs are shaking up global stock markets, and the ripple effects are reaching the UK property market. While some investors are understandably anxious, fearing a repeat of the 2008 crisis, experts suggest we're in a stronger position this time around. With robust mortgage stress testing and more resilient homeowners, the UK is better equipped to handle this turmoil. Luxury markets in London and the Cotswolds were already feeling the pinch from high taxes, and now the added uncertainty from tariffs is making middle-class buyers more cautious. Price growth is expected to slow, but a crash seems unlikely. Instead, we might see more negotiation on prices as buyer sentiment weakens. On a brighter note, if the Bank of England cuts rates to stave off recession, we could see mortgage rates drop, benefiting those coming off fixed deals from the pandemic. However, we must keep an eye on inflation risks that tariffs could bring, potentially pushing rates back up. For first-time buyers, modestly falling prices could present new opportunities, but those relying on savings or parental support might feel the pinch from declining stock markets. Additionally, government building plans could face challenges if construction costs rise due to tariffs. Overall, while we're in for a period of volatility, the UK property market remains underpinned by a shortage of homes and long-term investor confidence. Estate agency has always revolved around people and relationships, not just properties. Yet, in 2025, the landscape is more challenging than ever. Rising regulations and demanding consumers are just the tip of the iceberg. The property buying process remains frustratingly slow and fragmented, with countless parties involved: agents, lenders, surveyors, and conveyancers, each adding layers of complexity. Traditional software merely digitizes this broken system, but what we truly need are tools that foster collaboration across all parties. Imagine a world where estate agents can streamline compliance, simplify data gathering, and prepare properties for conveyancing with ease. new digital services are making this possible, allowing seamless communication and collaboration among everyone involved in a sale. Agents who embrace these innovations will not only transform their own workflows, but also reshape the entire property market, leading to faster, more efficient, and ultimately more profitable transactions. Savills highlights the critical role of single-family housing, or SFH, in addressing the UK's escalating rental demands. From 2019 to 2024, SFH investors have delivered 8,000 homes, but to meet the government's ambitious target of 300,000 new homes annually, we need to accelerate this growth. Currently, 14,000 SFH homes are completed, with another 13,000 under construction. And this sector is expanding across nearly 40% of local authorities in England and Wales, rising rents in high-demand areas like London.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.